How's everyone doing? Good. Good afternoon, and thank you. I have the pleasure of introducing our featured guests for this afternoon's one-on-one conversation. Widely regarded as a visionary entrepreneur whose philosophy of doing well and doing good has resulted in phenomenal business success and inspiring philanthropic initiatives for Jamaican-born Michael Lee Chin, Chairman and President of Portland Investment Council. This privately held investment company manages public equity, private equity, as well as having direct ownership interests in a collection of diversified businesses operating in sectors that include telecommunications, financial services, media, tourism, agriculture, and waste management, and wields a magic touch, turning million-dollar businesses into billion-dollar conglomerates. Conducting today's one-on-one conversation is the host of Our World with Black Enterprise, Paul Brunson. Ladies and gentlemen, welcome, fellow Jamaicans. Ladies and gentlemen, welcome, fellow Jamaicans, Michael Lee Chin and Paul Brunson.
All right. You ready, sir?
I'm ready.
Okay. Now, he said fellow Jamaicans, we were late. Look at that. So I tell you what, we only have 20 minutes, and then we're going to move to a 10-minute Q&A, and this is a conversation that could literally go for days. But I want to begin with you as a little boy in Jamaica. My father, from Kingston, Jamaica, yes, that's right, always told me, if you want to get to know the man, you have to first know the child. Who was Michael Lee Chin as the child?
Well, I was the first of 9 children. And when my mom when she had me, she was 18 years old. Okay. And she was a teenage pregnant mother. And when I was born, my dad had already emigrated to England. Okay. So she was on her own. So it was her and I for the first 7 years. Now, at the time, it was normal for Jamaican women, mothers, to emigrate to England to do nursing and send remittances back home to support children at home.
Yes.
My mom refused to leave her son, Mike. She said, if he's going to suffer without me, we're both going to suffer. So we're going to toil together.
Wow.
So I was fortunate to have had a mother who was dedicated to family, who led by example and who had high expectations of herself and, unfortunately, me.
Well, I tell you, I know that at an early age, too, that you learned a lot about opportunity.
Yes.
And the importance of leveraging education.
Yes.
So tell us about that.
Well, the first day in high school, I was 11. And we were in an auditorium a little bit smaller than this. And we're being addressed by the equivalent of the governor of the state in Jamaica. It's the custos of the parish. His name was Mr. Grosset. And Mr. Grosset, we were all standing at attention, me in my short khaki pants. And Mr. Grosset said, "Ladies, boys and girls, opportunity knocks, but once." So I'm thinking, wow, what if when my one opportunity comes knocking, I'm sleeping? Or I'm gazing out the window, or I'm playing marbles. We didn't have TV then. Then my life is over. So for the next 12 years, I didn't sleep, I didn't gaze, nor did I play marbles. I'm looking for my one opportunity. Until this friend of mine said, "Mike, why do you look so sleep-deprived?" I said, "Well, I'm looking for my one opportunity." And I told him about Mr. Grosset. He said, No, Mr. Grosset was wrong. Mike, every day there are opportunities. But unfortunately for most people, opportunities are usually clad in crises. And when there's a crisis, how do you feel? I feel awful. Because you're focusing on the first component of the Chinese definition of the word crisis, which is crisis equals danger plus opportunity. So you can't have an opportunity unless there's a crisis.
Interesting.
So that was my lesson. That was a big lesson in life. So as of then, my perspective was totally different. Whenever there's a crisis and I look pallid and I feel awful, I ask myself the question, where are the opportunities?
Wow. And clearly, that's how you built your career.
Yes.
Right? And so at the very beginning of your career, right, you were not in finance, you were not in engineering.
Yes.
You were a bouncer.
Yes.
Of all things, right?
Yes.
How did you become a bouncer? I'm curious about that.
Well, I was tall and big, and so I was a bouncer at the university's pub, and I was making $2. This was 1977, so I was making $2.50 per hour. So this friend of mine came in one night and said, "Mike, tonight I made $200." I said, "Wow, I'd have been bouncing for 80 hours to make $200. Next night, he came and said, "Mike, tonight I made $400. I said, "Whoa, that's 160 hours of bouncing." Whatever he's doing, I'm going to check it out. So I went to this local mutual fund company's office, and they gave me this psychological test, which I, by the way, failed. But eventually, they must have been desperate. They hired me. So I became a mutual fund salesman at age 26 in Canada. So at age 26, you know no one with money. And coming from Jamaica, you know no one with money. But I had to be selling investments in Canada. So that was my beginning.
Oh my God. So 26 selling investments in Canada, I would imagine you stood out like a sore thumb.
Yes. And Canada wasn't as multicultural as it is today.
Wow.
But every time, Paul, I would sit across the kitchen table, which the prospects' kitchen table from the family, I'd ask myself the question, what is the highest value added I can give this family today as an advisor? And the answer kept coming back to me, make them wealthy. That's the highest value added any advisor can give to his or her client.
Interesting.
So I thought, is there a formula that if you practice consistently, which is no different from mixing 2 atoms of oxygen with 1 atom of hydrogen, you'll get water every time. Is there a formula like that if you practice consistently, you'll get wealth every time? So that was my quest as a young man. I wanted to find the principles that linked every single wealthy person together, if there was a common thread.
So did you find it?
Yes.
Clearly you have.
Yes, I did.
Could you share that with us?
Yes.
We would like to know that.
So, by the way, today, if anybody has a cell phone, Google it and see what comes up. Google the formula for creating wealth. Nothing will come up today, 2015. But I discovered it in 1979. And what I discovered was the following. Everybody who created wealth did so by doing 5 things. Before that, I recognize that successful people, they really have, they really do 3 things very well. They make decisions based on having a sound framework that to them is a religion. Secondly, they are very disciplined towards their religion, which keeps their behavior consistent and minimize mistakes. So they have a framework, and they have discipline towards their framework. And lastly, successful people, they have access, right? Access to other successful people, access to good ideas, access to good products, access to good assets, access to borrowing, access to financing. They have access. So I recognize I needed 3 things. A framework that made sense. I needed to be disciplined towards my framework, and I needed to make sure that I built a network of access.
And that 3-pronged philosophy applies outside of business, I'm assuming.
To life.
To life. Okay.
So within the first prong of framework, I discovered that every wealthy person created his or her wealth by doing 5 things. Number 1, They all own a few high-quality businesses.
Okay.
Number two, they make sure that they really understand those few businesses. Number three, they make sure that those few businesses are always in strong long-term growth industries. Okay. Number four, they use other people's money prudently. And number five, their attitude is simply that they're going to hold these businesses for the long run.
Right. We got to love that OPM, right? Other people's money.
Yes.
Love that. So it's interesting, listening to the framework of the five,
yes.
I believe that 1 and 4 seem to be of challenge, in particular to minority entrepreneurs.
Yes.
Right? One being holding those few private businesses.
Yes.
Because I don't feel like we have access to deal flow.
Yes.
So how do we get access to private deal flow?
Well, I can only speak from my own situation, and then extrapolate from that. As you know, we own the National Commercial Bank of Jamaica, which is a platform company. When you own a bank, you have a very good perspective on what's going on in the region.
Okay.
Secondly, we just exited a telecommunications company, Columbus Communications, that we started in 10 years ago, in 2005, 2006. We just sold it. It became the largest supplier of broadband to all Central America, South America, and the Caribbean. Columbus Communications. We just sold to Cable and Wireless for $3.2 billion. So these businesses that we have, they give us a purview, an overview into the different countries that they're operating. So we're in-country operators. But that's now. The question I think everybody is more interested in is how did you get access in the first place? Not now, it's easy now.
Right. You got a couple $2 billion now.
Yeah, so you know, before the going from the philosophy to building a business, AIC, I asked myself the question. I was selling mutual funds, remember?
Right.
And a mutual fund, as we all know, is a diversified asset, 100, 200 different stocks / businesses. So if you have a religion, and my religion is my philosophy, the 5-point philosophy, the first question I had to ask was, when clients buy mutual funds anywhere in the world and everywhere in the world, why do they buy mutual funds? Well, they buy to create wealth. So therefore, logically, the mutual fund product generically should meet the test of the 5 laws.
You would think.
You would think. But as a young man, I was blown out of my mind when I went through each one. Number one, wealth is created by owning a few high-quality businesses. Does the mutual fund product generically fail or pass? Fails. Yeah. Number two, wealth is created by really understanding what you own. If you own 200 different businesses, is it possible to understand them all?
Fails.
So it fails. Number three, wealth is created by making sure that what you own is domiciled in strong long-term growth industries. If you own 200, you'll have some in high growth industries, medium and bad industries. Absolutely. Does it pass or fail? Fails on 3 counts. Number 4, wealth is created by using other people's money prudently. If you own 200 different businesses, are you sure you have 200 crackerjack CFOs?
Not at all.
So it fails on the 4th count. And lastly, the average turnover rate of a mutual fund generically is 80% a year, meaning the average hold period is 14 months. I don't know one business person in the world who buys and sells his businesses every 14 months. So as a young man, age 29, I thought, oh my gosh, having this philosophy is now telling me that generically the mutual fund product does not make sense. It's a mismatch between what clients are asking the product to do and what the product can actually do. It has no resemblance to creating wealth. So I thought, wow, there's an opportunity. Why don't I start a mutual fund that is 100% in keeping with those 5 principles?
And I would imagine no one wants to buy into that.
No. So I started a mutual fund with 15 companies that I understood, all the 15. So for the first 5 years, it was tough sledding because I had to develop a reputation and a track record. But in the back of my mind, what kept me going for this period of drought was the following. Every professional, every business has to do 3 things very well to be long-term sustainable. Number 1, we have to build the best reputation possible. Okay. And you build the best reputation possible by having stated values and be consistent to your value system. Number 2, every professional, every business has to be conscious about how it's differentiating itself every day in the marketplace. And number three, every business, every professional has to be 100% sensitive. Am I really relevant to my clients? And if we can keep those three prongs in mind, we'll build a fantastic business over time. But you have to persevere to get to the point whereby, yes, your reputation is built and you're associated with your value system. So for the first 5 years, it was tough. Then thereafter, we started off with a portfolio of $900,000, and at the peak, we had $15 billion. Yeah. Simple by sticking to the knitting.
And what I also find fascinating in this story is that you have not raised one penny of private equity.
No.
Not one penny
Not
in your
one
career.
penny, yes.
So when you go back to that fourth
No, for our own business.
For your own business.
But for a private equity fund,
yeah,
we have fundraised. Yes.
So thinking about that number 4 prong of other people's money,
yes.
How do we, as minority entrepreneurs, gain access to other people's money?
Well, what I had to do, Paul, was recognize what my strengths were. And I had the ability to sell mutual funds and hence generate cash flow. I didn't have access to friends with money who could capitalize me. I didn't have access to venture capital funds. So if you don't have access, you have to work, and you're driven, you work within the confines, the constraints of what you know best. So what I knew best was generate cash flow. And you generate cash flow, and how I pictorially saw it was, as a professional salesman, financial advisor, I had cash flow. What I needed to do was transform this cash flow into a mountain of assets. So how do I take the cash flow and transform it into a mountain of assets? Well, going back to my principles, I went to the bank and I made an application to borrow $500,000 in 1983, 4 years into the business. And to my surprise, the loan was granted.
How did they grant that $500,000 to you?
Because I had a portfolio. I have always known that to be successful long term, I had to be a great investor. So I stuck to my knitting. I invested from day one. I was an avid investor from day one. So I had a portfolio of mutual funds that I gave as collateral. I had given as collateral, and then I thought I should disband the mutual fund collateral and loan and borrow to invest in one stock. In this case, it was Mackenzie Financial Corporation. So I disbanded my portfolio, went to the bank, asked for a loan of $500,000, which meant the bank had to substitute a portfolio of mutual fund collateral with one stock.
With one stock.
And increase the loan. So I thought, no way a prudent banker is going to approve that loan. Surprisingly, the loan was approved. So we just have to sometimes step out of our comfort zone, dream big, and go for it.
Absolutely. Step out on faith.
Yes.
Step out on faith. And so I know that later on in your career, you acquired NCB, National Commercial Bank of Jamaica.
Yes.
Now, why was that such a personal acquisition for you?
Well, again, I'm a dogmatic person. So I get very excited when three preconditions are met. And the first being, in terms of an investment, the first being, there must be a difference between perception and reality. Because only when there's a difference between perception and reality can you capitalize on the knowledge arbitrage. Secondly, there must be a lack of equity capital going into a region, a business, a sector. Because only when there's a lack of equity can you create outsized wealth. And thirdly, there must be inefficiencies. Because only when there are inefficiencies can you transform what is inefficient to something that is less inefficient. And in that transformation, there's the wealth lift. So when those three preconditions are met, voila.
There it is.
So National Commercial Bank was being shopped globally. Nobody wanted it because you just don't associate Jamaica with a mecca for great investments. And hence, there was a lack of equity going into that area. So it met all, and it was very inefficient. It was taken over by the government, and it was very bureaucratic. So it met all three preconditions. So we bought it in 2002. In 2001, the year before, our main competitor, a large Canadian bank, had a 54% market share. NCB had a 24% market share. Our main Canadian competitor, large Canadian multinational bank, they're in 50 countries. NCB is in one country, Jamaica. So the challenge was, how do you take on a multinational with a 54% market share when you have a 24% market share? Today, the rules are reversed. NCB has a 41% market share, and our competitor has a 36% market share, and NCB is more profitable.
Oh my goodness. And I tell you what, we're going to go to questions in just a few minutes, or actually in just 2 minutes. But I need to ask you this: is that just within the last 2 weeks, Elon Musk, from PayPal Mafia, right, CEO of Tesla, SpaceX, multi-billionaire, his wife recently came out in a New York Times post and talked about how becoming a business mogul is not what we all believe it is, right? And that it's extremely challenging and it revolves around extreme sacrifice.
Yes.
I'd love to know, as you've become a billionaire, one of the few black billionaires in the world, what have you sacrificed?
Well, it's a matter, well, firstly, if you're passionate about what you're doing, you don't feel like you're sacrificing. It's just your passion. I guess your passion really protects you against feeling sorry for yourself, right? Because you're driven. So what drove me, I recognized early in my career that if I'm going to be successful at anything, I have to be a disciple of something. So the big question in my mind has always been, what am I a disciple of? What will I be a martyr for? What are my principles? What's my religion that are inviolable? And whether or not they're accepted, as the case with mutual funds, your typical mutual fund has 200 securities. Mine has 15 securities. So it was totally off kilter with what is the norm. But because of my principles, it was the right thing, and it is the right thing. So it took 5 years toiling, going through the process of convincing, selling, educating constantly until the track record was built. And people said, wow, this is great. Now the assets came in. So it's a matter of being passionate about what you believe in, persevering through the ups and downs, having fun in the interim, and
But are there any, for example, I think about Elon Musk's example, right? What his wife mentioned is that he has no hobbies, right? His family life has suffered as a result of this. Is there anything outside of the business world that's had a negative impact as a result of your success within the business world?
Well, I don't know, because I'm concerned more about the focus that I have. And the focus that I have would be primarily family and business. So if I'm not at work, I'm at home.
Oh, there you go. Do you have any hobbies? I'm curious.
Working out.
And he's a strong guy, a very strong man. All right, so what we're going to do is we're going to open this up to questions. We'll only be able to take 3 to 4 questions. We have someone in the audience running around with a microphone right now.
Hi.
Hello.
Thanks so much for the investment advice. I'm Cammie Newman. I run a business here, Pop-Up Plus, but I'm Jamaican born. So So I'm extremely passionate about using my own income, my personal income, to reinvest in Jamaica.
Yes.
Certainly, I don't have NCB funds, not yet, to buy a bank. But what's your advice for young entrepreneurs who would like to reinvest in where they were born or where they're from, whether it be Jamaica or other countries in the Caribbean? Because often we hear that there's no value there, which we know isn't true. But if you can give any tips on that, that would be great.
Well, I can speak specifically to Jamaica. Because Jamaica meets those 3 criteria. People don't envisage Jamaica as a mecca for investing. Yet still, Scotiabank has been in Jamaica since 1888. And in 2001, the Bank of Nova Scotia made 8% of its profits from Jamaica. Scotia International, Scotia is in 50 countries. In 2001, Scotia International, everywhere except Canada, made 25% of its earnings from Jamaica. So most people just wouldn't know that.
To Scotiabank, Jamaica is very important. Now, the stock market in Jamaica is illiquid. Therefore, when you have an illiquid market, the market doesn't value businesses by normal norms. So in Jamaica for the last many years, in fact, even today, the markets are still undervaluing good, strong businesses. Businesses today are selling for 60% of book value when they should be selling for 1.5 times book value. So I would suggest that you take a look at businesses. The easiest way would look for identify businesses that are trading on the stock market, that are high quality. Go back to the philosophy again. High quality, strong management team, disciplined, and with people who own these businesses who have skin in the game. They're not just operators, they're owners and operators. And you can buy today at great value.
Thank you so much.
You're welcome.
Okay. Any other questions?
Hi, good afternoon. My name is Arthur Toole. First, I want to thank you for allowing your life to be a case study. I've followed you for about 10 years, so I'm really grateful. I left banking to go into investing in part because of your story. Over the last couple of years, you've talked about democratizing private equity to give access to retail investors. What's been the biggest challenges you've experienced with that, and how are you overcoming that?
The biggest challenge would be to expect that you can get distribution from traditional brokerage houses or traditional financial planning houses, stock brokerage houses, etc., because their model is not to democratize private equity. So what we had to do, the gatekeepers, these entities, they just will not allow our products to pass through their gate. So what we are doing in the process of doing is building our own distribution network, because it's totally embryonic. We are certainly fighting the system, because the system is traditional. When you go to a broker, you'll end up with a portfolio that's 100% publicly traded securities, yet still nobody has ever created wealth owning 100% publicly traded securities, but that's what you get. So we're building our own sales force to change the conversation so that clients should be asking themselves the question, why is my portfolio 100% publicly traded when Warren Buffett's isn't? Right? When I don't know any wealthy person whose portfolio is 100% publicly traded securities. So we have to somehow educate the public to be asking these questions. In fact, what is even more ridiculous is if I'm a teacher, and in Canada, I'll eventually get a pension from Ontario Teachers. Now, Ontario Teachers is one of the largest pension funds in the world, and they have 50% of their assets would be in private equity, private assets, etc., hedge funds, etc., etc. Certainly not 100% public. So the biggest challenge, number one, is traditional brokerage houses, traditional advisors, is to change the way of their thinking and to change expectations of what retail clients should expect of their portfolios. And the ideal portfolio should be a composite of public and private. It's educating the public that you don't need 100% of your portfolio to be liquid, because there's a premium that you get, a return premium you get by being illiquid. And a portion of your portfolio should be illiquid to capitalize on that return premium. So it's an education process also.
So how may I help you further that?
I don't. That was good. Very good. Really good.
I don't know. I don't know you.
But so I asked that because I spent the last couple of years teaching like the younger demographics about investing, particularly not just public but private equity. And then I've shown them by what I'm doing, but I want to be able to help on a grander scale. And I wanted to follow in your footsteps in doing that.
Well, well, again, it's, yeah, I don't know your background, but again, if we have Black Enterprise took on the project into looking to see whether or not what Mike is saying makes sense, and if it does make sense, Black Enterprise should say, well, here is a way in which we can help our readers or audience to create wealth, and making sure that we at least engage our audience to become knowledgeable and ask the right questions and have the right expectations, not just accept that they're going to create wealth by owning mutual funds or stocks, because no one has ever created wealth by doing that. So once we create a demand, the supply will follow. So Black Enterprise has the opportunity to create a demand.
So now we have the challenge.
Yes.
Now we definitely have the challenge. Next question.
Hi, I'm Eddie Edwards. Hi, Mr. Chin, how are you?
Pleased to meet you, sir.
Thank you for the increase in dividend that I'm getting on my stock from NCB. I appreciate that. But my question to you is really twofold. There seem to be a lot of Jamaicans who are either underbanked or non-banking in Jamaica. What is NCB doing about that? And also in regards to the dormant fees that the banks are collecting on accounts that have pretty much minimum balances, but the bank just take fees out of them. Is there anything that is going to be done to prevent that?
Actually, it costs to have dormant accounts. So we would rather have the dormant accounts be closed than have a nominal amount of cash in the accounts because it is costly just to keep an account open. But what we should do, this is not a relevant question to the major audience. You should ask me the question offline. Thank you.
There you go. All right. Next question.
Good afternoon. My name is Christine White. Thank you so much for taking your time to speak with us today. I am a tax attorney by trade, and I am a business manager, and I manage the affairs of high net worth individuals, and we're always looking for private companies to invest in, but I heard you talk a little bit about the principles that you look for, and I've read a lot about what principles we should be looking for in businesses when we're doing the feasibility. I was wondering if you would share a little bit more with us about what you look for in private businesses for investment purposes, or maybe even startup businesses.
Well, firstly, we do not, generally speaking, invest in startup businesses unless we are starting them up. Because investing, that's venture. We need predictability. You can only value a business if you can value the cash flow. If you can't value the cash, and so there has to be cash flow that is predictable, that to be valued. So a venture doesn't have cash flow. So therefore, our philosophy would exclude. This is when we, as a fiduciary now, our philosophy would exclude us investing in ventures. So what are some of the attributes we look for? Firstly, management that has absolute skin in the game. Because in most publicly traded companies, management and the directors have no skin in the game. They are just operators. But there's a difference between being an operator and being an owner-operator, which is what you get with a private company, an owner-operator. So skin in the game is of absolute essence, is essential. We look for management that has absolute integrity. They behave in such a way that they make their decisions based on sound intellectual framework, right? And their attitude, and I'll give you an example. Their attitude is, irrespective of the challenge, we're going to either go through it, around it, or under it. And I'll give you an example. In 2000, Jamaica, over the last 2 years, or 3 years, has been through 2 national debt exchanges, whereby the government had to invite the IMF to assist it with its debt management. So with the first debt exchange, which was called the Jamaica Debt Exchange, JDX, we as the National Commercial Bank, we're now the largest creditor to the Jamaican government, we had to turn in, or we voluntarily turned in to help the country, our 22% yielding bonds and accepted 12% yielding bonds. So we took a cut of 10%. Now, 60% of our assets were in government bonds. And this happened in the middle of the fiscal year. So our budget was already cast. So a rational board would have said, well, since 60% of your assets will now take a haircut from 22% to 10%, the budget will not be met. We have a CEO who said, no way. We will have to do everything, notwithstanding this calamity. We are going to do everything to meet budget. And at the end of the fiscal year, he exceeded budget by 18%. So that's the type of management we look for. And in the case of NCB, we have. So we need management, most important, skin in the game. You have to make sure you're looking at a management that is thinking long term. Again, go back to the 5 principles. Management that really understands the business, the industry. Management, and the business is in a strong long-term growth industry, because you will make mistakes. And when you make mistakes, you want to make sure that the tide is rising, so it bails you out. That's the importance of being in a strong long-term growth industry. You want to make sure that management is very cost-conscious, because costs, if I borrow the narrative from the 3G Capital, the Brazilian guys who just bought Heinz, expenses are like fingernails. You have to keep cutting them. Right? And so you need a management team that is expense conscious, and that's not easy. And also you need to look for a management team whose perspective is we're building a business, a high quality business that is going to be intergenerational in its time frame. So going back again to the principles of the 5 laws.
There you go. Framework. Yep, absolutely. So we have another question?
Okay. First, I would like to applaud you on your hard work and your success as a Jamaican. And secondly, both of my grandparents and my father are all Jamaican, and they're entrepreneurs. My father is still an entrepreneur in Jamaica. He has a hotel and a restaurant. But what I wanted to find out is that I'm a business owner and an entrepreneur and an operator owner here in America. So I wanted to find out when you work your business and it's pretty successful and you have the numbers cash flow wise, how would you actually be able to come to Jamaica and when you do want to open up a business possibly there, is there easy to get commercial loans and things like that to assist on your business?
Well, it depends on if you're going to start a business, that's one thing. If you're going to buy a business that is existing, that's another thing. So it may be easier to seek out businesses that are already there, and you just bring capital, know-how, and a mindset that you want to recalibrate standards. Because we have an opportunity here. We work in an environment that is very efficiency-minded, right, here in North America. In the Caribbean, there are a lot of inefficiencies. So if you brought capital and an efficiency-minded mindset, there's a lot of wealth that you can create.
Okay.
So instead of starting a business, probably you should look for a business that has the attributes that you'd like to own for the long run.
Right.
And then you just bring capital and efficiency, and you'll do well.
Okay.
If you take that attitude also, it's easier to bank.
Yeah. Thank you.
You're welcome.
There you go. All right. Do we have any other questions? Okay. You know, as you were talking, I was thinking if we all take up the Black Enterprise Challenge that you just mentioned.
What's the challenge?
Well, the challenge is to lead through the framework.
Yes.
That you mentioned. Would you host us at your beach in Jamaica I think that would be very
The small hotel that we own the beach isn't large enough for 1,000 people.
one at a time.
One at a time.
Yeah.
You take the challenge, and I'll do it. It's a deal.
It's a deal. Okay, yeah, there you have it. You have a deal. Well, I'll tell you what, Mr. Lee Chin, this has been incredible. This has been an incredible opportunity for us. We really want to thank you for, as the gentleman said, leading by example. And I think that example goes back to the framework that you mentioned, and that is driven by your discipline.
Yes.
And I think if we can only take that lesson, that nugget, we'll all be extraordinarily successful.
Yes.
So thank you very much.
You're welcome.
That's it. And Derek is going to come on stage after this.
Who?
Derek is going to come on stage.